China's July Politburo meeting emphasized key themes for future development, and the meeting showed that the policy stance will remain supportive while continuing to emphasize the recent focus on building domestic demand and supporting the hardest hit exporters. All eyes will now be on China's fourth plenum and the upcoming 15th five-year plan, which is already in the works. China is expected to convene in October to discuss the next five-year economic plan. Boosting domestic demand has been a recent policy focus, and the Politburo meeting continued to emphasize this point. The discussions called for the implementation of policies to boost domestic consumption along with developing service consumption further. The meeting emphasizes the need for keeping policy stance on the side of easing. Recent economic data has come out stronger than expected. Another trade truce extension with the US has also kept the need for, or the urgency for, further policy support from looking as high as it did a few months ago. Still, with renewed downturn of the property market, policy support remains important to ensure growth stays on track. One factor holding back China's overall domestic demand picture has been weak household confidence. One of the reasons behind this has been the recent environment cost cutting, and this has led to pay freezes and pay cuts, hampering income confidence. The much anticipated fourth plenum could also offer clues about new faces of the party's central committee. China's massive auto market is hitting the brakes. After months of intense price wars and aggressive discounts, car makers are stepping back under pressure from Beijing to restore order. Let's delve into the factors driving this shift. Take a look.
The world's largest car market is navigating a period of turbulence. After months of aggressive price cuts, car makers are now hitting the brakes. Following warnings from Beijing to restore market order, major automakers have pulled back discounts and interest-free loans. Fitch Ratings says this move is likely to weaken demand in the third quarter. Consumers, still expecting further price drops, are taking a wait-and-watch approach. This could temporarily suspend sales and the broader industry outlook. Despite the short-term slowdown, analysts expect a strong rebound in the final quarter. The reason? A key tax break on new energy vehicles is set to expire at the end of the year. Currently, buyers are exempt from a 10% sales tax. But from January 2026, a 5% tax will apply, increasing to 10% by 2028. Fitch says this looming deadline could trigger a rush in year-end purchases as buyers move to lock in savings before the policy change kicks in. In the first half of 2025, Chinese car makers sold 10.9 million petrol and electric vehicles, a 10.8% rise from last year. Of that, EV makers delivered 5.5 million units, marking a 33% year-on-year surge. However, profitability remains a concern. Out of over 50 EV manufacturers, only 3, BYD, Li Auto and Ceres, are profitable. The intense price competition, while boosting volumes, has squeezed margins and threatens the survival of smaller players. Business Bureau, WION World is one.